increased their net wealth by $57,000 through the equity gain in the ownership of their home. Just take a look at this. Welcome to the Market Clarity presentation for the month of December 2021, last one, of course, for last year. My name is Phil Levy. I'm a broker associate with Berkshire Hathaway Home Services, California Properties, and together with my son and associate, Joey Levy, each month we endeavor to bring to you the latest information and data so that you know what's really going on in the real estate market and can make the best decisions for you and your family, whether you're owning, buying, or selling. So let's get started with the agenda for this recording. We're going to talk about home equity growth. We're going to talk about interest and mortgages. We're going to talk a bit about rental rates and what's going on with rents, because they are the alternate to owning. And of course, as usual, we always talk about what's going on in the Santa Clarita Valley of California. As you just saw from that video, the average homeowner last year made $57,000, and this is third quarter, year over year, made $57,000 in equity gain from the ownership of their home. That's a 31% increase over what they had the year before. As we mentioned previously, home ownership and property ownership is a great hedge against inflation, and prices have gone up at an unprecedented level, well into double digits over the last year and year or two since the pandemic started. Altogether, the economy gained $3.2 trillion in wealth when you add all of the equity gains from all of the property owner, all the residential property ownership in the country. However, interest rates are on the move. Here is a chart that we recently published containing rate projections from various agencies and associations, Freddie Mac, Fannie Mae, Mortgage Bankers Association, and the National Association of Realtors. The average of all four had interest rates moving up to 3.3% by the end of the first quarter. Well, folks, they're already up to over 3.5%, and this was as of January 20th, 2022. This is about a 0.75% increase over where we were 1 year ago. So interest rates are already eclipsing the forecasts that were done not too long ago, and basically in the month of December. And then if you look at the overall rate projection by the end of the fourth quarter, these agencies averaged a projection of 3.7%. With the highest being 4 by the Mortgage Bankers Association. So interest rates are already exceeding the expectations. The increases are already exceeding the expectations. We'll have to see what happens by the end of the year with these rates, but it could come in, very well could come in closer to 4 than to 3.7. We'll just have to wait and see, and we will watch this closely and keep you advised. But the alternative to owning a home is a rent. And you could see that rents are skyrocketing as well as home prices. This is a graph provided by CoreLogic, and this shows that the rental of single-family homes are range between 9 and 12.3%, whether depending upon whether they're attached or detached. So you could see that if you went to rent a home, you'd probably be paying a lot more now than you did even a year ago. And this is only over the period of 1 year. Interesting to note, rents have been relatively stable over the past 10 years or so, and only recently since the pandemic have the rental rates increased. Putting this into a geographic perspective, this is based upon the November single-family year-over-year rent change by CoreLogic. Overall, Los Angeles is 7.7%. The average home rental rate is 3.18. And by the way, Los Angeles is a huge area, covering a vast array of properties. But the average is $3,188 a month. And that represents a 7.7% increase over the prior year. Averaging all these together, average rents are right around 11.5% if you combine all the metropolitan areas together. Let's shift gears to the Santa Clarita Valley. These charts combine 3 months worth of data, and we do that to make sure that we have an adequate confidence, that we have an adequate amount of data to provide confidence in the presentation of the information, and also to iron out any aberrations that might occur from 1 month to the next. This is for the Santa Clarita Valley, which represents Acton to Castaic. And the charts are broken down for attached homes versus detached homes, and then combined all together. Active listings are down 33% from where they were last year, which was down 23% from the year before altogether. Pending sales are down a little bit from last year, but still well above pre-pandemic levels. Closed sales are down just a little bit from last year, about 12%, well above pre-pandemic levels. So the interest in buying homes is still relatively very intense, actually. Median price has gone up 13.4% year over year. And this compares to 11.5% increase from the prior year. So altogether, the consolidated increase is right around 25%. Interesting to note, the median price for a single family home or a detached home is $806,000 as of this last analysis. Median days on market is 9 days, about just a little over a week. So the homes are flying off the shelves, and that's the amount of time it takes from a home getting listed to the time it goes pending under contract. And the number of months supply is under a month. Anything under a week is considered to be a seller's market. And as you can see, if we're under 1 month, we're in an acute seller's market. And you all have heard about multiple offers and bidding wars and so forth. When you go to buy a house, you've got to have an agent that knows how to write the most strategically advantageous offer on your behalf. And if you're selling a home, the agent has to know how to analyze the offers to make sure that the offer is the best one available to you. This last chart depicts the number of showings we're getting per listing before it goes under contract. And that is up considerably over last year. It's up 2/3. It's gone from 3 to 5 on average. Just another indication of the intense interest by buyers to take a look at homes that become available for sale. So that concludes our discussion for December 2021. As usual, please like, subscribe, comment. If we can be of any service to you, please contact us.